let's turn our attention to all that's happening across the globe, talk a little bit more about commodity prices too. And joining in right now on the show, right here in our studios, is Peter McGuire, the CEO at XM Australia. Thanks so much, Peter, for taking time out. Lovely having you with us in our studios. And let's get to talking about that hotter than expected inflation print that came in. What do you think this will lead the US Fed to do?
Well, good morning. Great to be here in Mumbai. A couple of things. I think it hit the market by a little bit of a surprise. And as far as a pushback, we were looking at the best part of 65, 66% as far as a rate cut come May, and that's been pushed back now to around about 32, 33%, and they're rolling that forward to possibly by June or July. So it seems to be the gradual pushback. So when do we see blast off as far as rate cut policy? And the second one is the market certainly didn't like it. They had a bit of a pullback, and gold really gave up some gains. US dollar went higher, and treasuries were to the moon.
Forget all of that. Tell me, each time you come to India, what's the difference that you see? You were there at the Global Business Summit in New Delhi. What's the chatter and the buzz around India?
I think so many different points, and it really brought to a conceptualised in my mind's eye as far as rail, transportation, and of course infrastructure. It's just breathtaking. I say that passionately because I believe it, and I saw the numbers, and I realised that what you're doing is with crisscrossing of the nation. You've only got to look at Delhi and what's going on there from an infrastructure, and then come to Mumbai, and it's breathtaking.
You can see it all happening.
Absolutely breathtaking. You've got roads that are about to be joined on nearly to the sea link.
Yes.
Then you've got the next part all the way down to Chowpatty Beach, and then you've got the underground railroad and the metro system, which is going to be incredible for transportation for every Mumbaiite. And but we just think, well, is that one part? No, it's the whole. After listening to Mr. Modi, it's the whole of India. So it's not only your decade, I keep on saying it, it's really your century. And I think you're just at the starting blocks. What you've got, where it's going, is going to be incredibly fascinating and electric.
So how does it tie in with commodity consumption here in India? Because with all this infrastructure boom is also going to come with a higher need for commodity, right?
Of course, you need steel, you need bitumen for roads, which is oil. You'll need pots and pans for new construction of apartments. People moving in and they want to be able to cook with something. You need copper wiring, you need iron ore for steel. So everything is going to be an upbeat, and that's why I don't believe, and I look back on what Jimmy Rogers used to say as far as super cycles, they go for 20 to 30 years. We are nowhere near the end of this commodity super cycle. It is absolutely full steam ahead when you're looking at the consumption pattern. You've got growing population, you've got more mobility, and you've got more energy requirements, electricity, fuel, and everything rolled into one as far as those base metals going into fund or able to build a nation.
So tell me, looking at the demand dynamics here and, keeping India in your mind, would it be steel, aluminum, copper? What's that one metal commodity that you'd bet on?
Oh, you've got to look at steel, because steel's a part and parcel of, I think, when I look at it, it goes into construction of so many things, buildings, tunnels, just everything requires steel. Steel in just nearly everything we do. But they'll all get a lift up. There is, a rising tide lifts all ships. Yeah. So I think the first part of it is naturally iron ore and steel. Yeah. And then the second part is, those other base metals. Yes, aluminium. Yes, copper, nickel, lead, tin. They all get a run.
Yeah, wanted to get in your take on crude, but before that, purely because it's making the headlines, Bitcoin, $50,000.
Yeah.
It's a very speculative, of course, currency. But how are you looking at the crypto market? What's been your take or observations?
69 to 16, and then this time last year, if you would have asked me, if you would have said to me this time last year, Pete, 14th Valentine's Day is going to be just on 50, I'd say, wow. I mean, that's a big move to the upside from 16. Well, it happened, it materialised. So you can't bet against a bull market that's so aggressive, and it's up 200% in that period of time. So, where does it go from here? It'd be hard to put a cap on it. And I think there's probably more upside than down, and certainly long term. There's the first part, and those other coins as well seem to be gaining more flavour with certainly investors and speculators.
And that's obviously telling you something about the risk-on sentiment across the globe. But tell me about crude. That's the big moving part.
I'm going to
2
Dubai
week
today.
high.
Yeah, exactly. You know, I'm going to Dubai this afternoon. I'll be seeing some oil people tomorrow and Friday. 6%, 6.5%, 7% up in a week. So there's an appetite there. It's also it's been in a channel. It's ping ponging, goes up and then all of a sudden gets punched down. Is this the next leg up? You know, it's nowhere. At probably early 80s is a nice place from a consumer standpoint. But if it edges higher, it's going to. We've got so many different points coming nearly driving together at the same time. You've got the restriction as far as shipping through Gulf of Aden into the Red Sea up to the Suez. You've got a drought in the Panama Canal. Not many people are aware of it from a shipping context. And then you've got rising energy prices. So all of this could be mayhem for the energy complex. And then you've got growing consumption. So I think it's going to be, again, higher, which in turn impacts inflation, which isn't a good sign for consumers.
But are we going to go back to those triple-digit levels?
Oh, too early to call, but if you had something major happen geopolitically, then it's got to say a yes. And that war premium would be built into it very, very quickly. So, yeah, the markets, I think it's got more upside than down at the present.
And the strengthening dollar, how do you see that panning out?
I had a nice rally. I mean, yields were up 10 and 2 year were really punched higher. The VIX was up 13% on the night. So the fear gauge, and then US dollar index nearly at 105. You've got Japanese yen through 150 now. You've got the Aussie trading in the 64s, and you've got the likes of pound, yen, and euro certainly creating much enjoyment and good times for traders. So I think the US dollar's probably got more legs up, considering that they're not going to cut rates anytime soon.
I have to ask you about gold, if you track that one
I
as
do,
well.
I sure
Right.
do, my favourite.
But you know, given the kind of uncertainties around the world, do you see a continual bull run for gold?
Well, it's had a great run over the last couple of years,
Exactly.
and we're punched under 2,000. Now it's back above 2,000. I haven't seen a screen in a couple of maybe 20 minutes. But yes, I think there's further upside certainly for gold, and gold plays into so many different, so many driving forces can change appetite. First off, of course, industrial. Secondly, investor demand from retail, central bank buying. All of these points really, I think, drive an uncertainty into the market, drive gold higher. So yeah, I think its best times are ahead of it for 24.
All right, best times ahead for gold. It's India's century. It's electrifying. You've had only great things to say. Thank you so much.
I mean it from the heart.
Okay, thank you, Peter. Good having you with us in our studios.